What is up, Theta Mafia guys? I'm glad to have you guys back. If you haven't watched my old videos that I released a couple weeks ago, and this week my investment journey, can I retire off of options, guys? It's all possible. It's all possible. Please watch some videos, guys. Please watch some videos. Now, these next few weeks, guys, I'm going to give you guys strategies. And today I'm going to give you one of the strategies today, and it's going to be called the double dividend strategy. This is for my dividend investors or companies that you own that pay a dividend. But before we hop into it, guys, please be on tune for all the strategies I'm about to be releasing these next few months, because these strategies will make you rich. Okay? Now, I'm going to give a brief overview of the portfolio. So far for the day, we are down basically 1%. Past week, we're down 2.5%. Past month, we are down 9.06%. Past 3 months, we're up 23.61%. And year to date, we're up 19.21%. So we are still technically beating the markets if we look at it, because year to date, I'm up 19%. Market's down 3.31%. The Dow is down close to 1%. And the QQQ year to date is down 5.5%. So technically, even though, guys, we have been down for the past month almost 10% year to date, which means the beginning of this year to where we're at now, we have beat the market over and over again, and we're actually still in the green, even though we took, a bigger percentage down. Now, this double dividend strategy, I love the double dividend strategy. It's, and I usually obviously use it for my dividend stocks, but you can also use it for the SPY, because a SPY, I'm pretty sure, pays a dividend. Now, is it a very big one? No, it's 1.18%. But if you have a lot of shares, it does help. The Dow has one as well. I think the Dow is a little bit bigger. Yep, 1.5%. QQQ has a little bit of one as well, I'm pretty sure. 0.55%, so 0.5%. Not as much. Meta has one as well. We go down to Meta, 0.32%. See, there's some companies that I have, right? I barely have any shares of those, guys. There's some companies that, pay a decent amount of dividend. But remember, you need 100 shares to do options on. And so for today's example, I want to show you Ford. I'm going to show you Dollar General. So Ford, for example. So if we're looking at Ford and I look at my position, my total average cost is $10.81. If I look at the bottom and we look at options, I'm currently selling a covered call on Ford for $10.35, all the way out to the end of this month for March, right? And so far, we are down $7, but we will be fine, because I don't think Ford will actually reach that $10.35 in my personal opinion. And we're collecting an average credit of 9 cents. Okay. And then if we go down and if we look, you see that Ford paid me a dividend. 15, 16 right there, and another 15, 16 right there. So basically a total of $30.32, right? But then if you look in the past, like you see this one, right? We got $9 for that. So that's pretty much what the double dividend strategy is. Now, if you want to be crafty and you want to do it monthly, I prefer doing it monthly. If you see what I did right here, this is all the way out for a month, right? I like to do it monthly, but you can come out here and let's just say, the next dividend date will probably be like June 20th. You can come out here, sell a covered call on there if you want. And let's just say you put it at 11.02. That's $30 for a strike price. So you're picking up $11.02 per share. You can do that if you want. I just prefer coming out here and doing it monthly for the simple fact and reason that I prefer that monthly income. So I just wanted to show you guys that yes, you can own dividend companies, but you can still get that monthly income with selling options as well, which is buying shares of a company, right? In this case, we have 104 shares. And every single month, I'm getting close to $9 to $10. So every single month, I'm getting an extra share forward, an extra share forward. And that's not even counting the dividends reinvested. If we looked at the last dividends, what I said we made what? $30.32. So that's enough for almost about a little over 3 shares, right? And then 3 shares in the future are going to bring me more money just because of the dividend. And eventually, over time, we will eventually reach 200 shares, right? And then we can come out here. Now, the trick is you do not want to let go of your shares. And I'll show you an example, okay? And here's the example. Look at Dollar General, for instance, okay? This past week it's been going up and it's skyrocketing. My average cost of Dollar General is $70.92. Okay, I'm selling a Dollar General covered call since I have 100 shares for $242 for my average credit in total. I'm currently down on the position because my strike price is 80 and the current price of Dollar General is 81.40. Right? So this options has what? Intrinsic value because of the value of Dollar General going up, right? And I only think this is happening because obviously Dollar General is having their earnings call soon on this week. So I think that's why we're seeing the rise in Dollar General. And we'll see what happens if it keeps on going up or not. Now, this is something, if you're a long-term dividend investor, you want to be careful for. But if you're solely trading options and you just have a company that's just paying out a dividend, this shouldn't really bother you, okay? Because typically you're going to make more money on selling options than you would waiting every 3 months or sometimes every month for a dividend, okay? Now, we want to be careful because if you are selling covered calls and right, we're already in the money, our shares could possibly get taken away from us. There are times where your shares do get taken away from you if you're already in the money before maybe dividend expiration date. And the reason why that happens is because that person that is buying the call wants to take your shares away from you, so he gets in before that ex-dividend date so he can collect that dividend. And then he'll just sell a covered call to get out of that position if he doesn't want to hold the position for longer. Okay? Now, this double dividend strategy helps immensely, guys. It helps immensely. And the reason why it helps immensely is you're getting paid an extra, basically bigger than an extra dividend payment every single month. Okay? Which the dividend payment is going to help you grow your portfolio, your underlying shares, but at the same time, your options income can help you come out here and buy more and more shares if we reinvested the options income back into that specific company. So this is one of my favorite strategies. It's called the double dividend strategy. And there's actually a triple dividend strategy that I can teach you guys in the future. But that is the double dividend strategy, guys. Be on tune for the next option strategy I'm going to give you guys, because the next few are actually really going to grow your wealth. This one's more aligned for my dividend investors, but yes, you still can come out here and trade certain stocks like I am, like Dollar General, like Ford, and get a decent dividend, but also coming out here and making great money. As you've seen, $242 on that Dollar General covered call. You still come out here and make great money. So guys, with that being said, I love you guys. Have a great weekend. Peace.